Jimmy V here, mortgage originator specializing in VA loans, and today I'm going to talk to you about really the two types of VA refinances that you need to know about. It's like, yeah, you can do more than just purchase a home with your VA home loan benefit, and refinancing is one of these things that not a whole lot of people talk about. 2024 is rolling in. You may have heard it already. Say investors are anticipating that the Fed could reduce the federal funds rate as many as 3 times, are hopefully optimistic that rates could go down as a result, meaning inflation is cooling. And anytime that happens, mortgage interest rates fall as a result. What does that mean? It means that there could be opportunity for you as the veteran to refinance your mortgage. Now, why in the world would a veteran ever consider refinancing? Well, that's a good question. A couple of different refi techniques or strategies that you as the veteran can use in conjunction with your VA home loan benefit. The first is referred to as a VA IRRL. I'm gonna write this down. VA-IRRL, interest rate refinance reduction loan, the VA IRRL. It's also referred to as a VA streamline refinance. Let's just assume for a second that a veteran closed on their house, got a VA loan for in the neighborhood of 7.25. Now, what they can do is they can actually reduce their interest rate with no out-of-pocket expenses, meaning all of the costs are rolled into the loan, no income documents required either. So you know how you had to do tax return, bank statement, pay stubs, and all that jazz? Well, this is why they call it the VA Streamline, because none of that paperwork is really required. In other words, it's really a non-income qualifying loan. They're simply reducing your interest rate to the current market rate that's available. I feel like I should say this because it's important. Be careful. Be careful for that stuff that you get in the mail that says that you are eligible for X, Y, and Z from online lenders that pose as if they're contacting you from your mortgage company. If you get like that, you want me to review it to ensure that you're getting a good deal or this particular company is legit, make sure that you comment down below. You can always email me at jimmy@valoans4vets.com. This VA IRRL, in my opinion, is an effective strategy for a veteran to be able to reduce their interest rate and save money both in the form of monthly payment and interest that they're paying to the lender every month. What else is a value add about this product? No appraisal required either. Kind of like shuffling paperwork, and about 30 days later or less, you can close on your new loan with the adjusted rate lower. Doing more than shuffling paperwork, of course, but it's a streamlined approach, and this is a highly effective strategy that if we think interest rates are going to go down in 2024, that you as the veteran may be eligible for, and it's worth considering. If you'd like me to review this for you personally, so all you got to do is email me at jimmy@valoans4vets.com. That's a little bit about the VA IRRL, interest rate refinance reduction loan. Lower your interest rate, saves money in the form of interest and payment. You got to make sure that it makes sense, however. Good to go. What do you mean by it makes sense? Well, is the juice worth the squeeze? Obviously, there's costs involved with refinancing. So for example, if the cost was $2,000, we have to be able to determine is will you be living in the home longer than the break even? So for example, if it costs $2,400, you save $200 a month, that's a 1-year break even. As long as the veteran is living in the property greater than 1 year, it could make sense in this specific scenario to proceed forward. But it's obviously a case-by-case basis, and it's up to you as the veteran or active duty service member to decide whether or not that's right for you, not me. Good to go? Talked about VA IRRL. The other one that I want to talk to you about is referred to as the VA cash out refinance loan. So just write this down, and I'm going to say VA cash out. Okay, make that a little bit better there. VA cash out refi. Here's what's kind of confusing about VA loans. The VA has an IRRL and a cash out. Now, just because a veteran is doing a VA loan doesn't necessarily mean that they have to pull cash out on a refi. For example, if a veteran wanted to refinance out of a conventional loan into a VA loan, VA technically calls that a cash out. Good to go. Or if a veteran wanted to refinance out of an FHA loan into a VA loan, that would be considered a cash out. Now, why would they want to do that or consider it? Well, it's simple. You're reducing your interest rate, saving money, potentially not paying private mortgage insurance, etc. But the other reason is to actually, you guessed it, pull cash out of the property. I mean, VA allows us to go up to 90% of the home's appraised values. Math for Marines here. If you've got a $100,000 appraised value, you could go up to $90,000 on the new loan amount. Now, why would a veteran do this? In some circumstances, they can use the money that they pull out of their property to pay off high interest rate credit card debts or auto loans or really whatever they want to do. It's their money. They can use it however they'd like, keeping in mind that you still have to qualify for the loan by way of credit and income. Now, if you're paying off high interest rate credit card debts and into one low 30-year fixed rate, effectively what you're doing is you are increasing your monthly cash flows. Yes, your payment may go up on a cash out refinance, principal and interest. However, you would in theory be eliminating a significant amount of debt, A, and B, freeing up additional cash flow. Let's say that a veteran's payment goes up by $500, but they knock out $1,000 worth of revolving or installment debt. Now they've got a $500 a month cash flow increase. This is an effective strategy for veterans and active duty service members to consider utilizing the equity that they've built up in their home to be able to once again pull cash out of their property and not only use it for paying off high interest rate credit card debt, you can use it to invest, you can do a remodel on your home, you can send your kids to college. Really, you can do whatever you want. It's your money, once again, keeping in mind that you're qualifying by way of credit and income. Now, obviously, to do this type of loan, you're going to need to provide all of the most recent bank statements, pay stubs, tax returns, etc., right? You're gonna need to provide all of that information, but overall, VA loans to be able to pay off high interest rate credit card debt on a 30-year fixed rate mortgage with no private mortgage insurance. Good to go. And if you're a service-connected veteran, you have more than a 10% VA disability rating, you will be able to have your VA funding fee waived. More questions about this stuff and how it works, know that I am not hard to find. Good to go? Jimmy at VALoansForVets.com. Drop a comment on the video down below if you have questions, and I look forward to talking with you real soon.